Robinhood stock, is it going to zero? Well, it has the potential to, and I want to break it all down in this video. What's up, traders? Welcome back to the channel. Jason Brown here, and we're looking at Robinhood stock, ticker symbol HOOD, HOOD, which has a different meaning from where I'm from. It's not associated with a brokerage account. But anyway, if you're not familiar with Robinhood, it is a stocks and options trading platform, and they went public back in July 21st, 2021. And what Robinhood is most known for is commission-free trading. They pioneered that. They just came into the game and said, no commission on trading stocks, no account minimum. So meaning anybody with $1, $2, well, typically they ask you to fund your account with at least $100, can open an account, and they don't have the minimums that some of the other brokerages used to have before Robinhood came into play. You used to have $500, $1,000, $2,000 minimum to open your account with certain different brokerage accounts. They also pioneer fractional shares. So if you couldn't afford a $2,000, $3,000 share of Amazon, you could buy a fractional share. And this is probably the thing they were most popular for, which is giving away free stock to people who join the platform. By the way, if you want to get a free Robinhood stock, we got a link below in the description. If you open your account funded with at least $100, you'll get a free stock. Now, I'll talk about why that may be a good thing or why that might be a bad thing. But first, let's take a look at the stock chart, and then I'm going to talk to you about 3 or 4 reasons why the stock could potentially go to zero. All right, so here we got the Robinhood stock up in front of us. You can see the stock shot all the way up to $87.50. It opened on July 21st down here at about, $35 a share or something like that. And then the stock went all the way up to about $87.50 a share, 1, 2, 3, roughly 4 days later. But ever since then, the stock has been pretty much crashing. And you can see the stock has come all the way down to about the 41.88 level. This is a critical level for the stock because that typically served as a level of support. The stock came down, kind of touched it, bounced back up, and now we're right back down there. But here's where it gets interesting if the stock can go to zero or not. So let me talk to you about some of the reasons that it may go to zero, which conflict with some of the reasons of things, what it's known for. So one of the conflicts that most traders had with Robinhood is that their server was unreliable. So on some of the most important bullish trading days of the year, Robinhood stock actually, not the stock, but the platform went down. People couldn't buy stocks and participate in the bull market. And conversely, on some of the most bearish days in the stock market, the platform crashed. You couldn't log onto your phone and you couldn't sell any stock. And so can you imagine being in a trade on a bad day when things are going down and you can't get out? And then on the day when things are going good, you can't even buy anything. It's like a horrible situation for a trading platform, right? So because of that, they've lost a lot of confidence with their traders. Even when we recommend the platform and company, it's mostly for beginner traders. It's mostly to get in the game, open an account on your phone, use their tools and get familiar with the stock market. But we don't typically recommend it if you're seriously trading any money, $5,000 to $10,000 or more. Now, the other issue that Robinhood had was with GameStop and AMC, which has been the hype of 2021 with the meme stocks, it seems like they were possibly in the bed with that company Citadel, which was the payment, the company that paid for order flow or something like that. But what happened was when AMC or GameStop was shooting way up, Robinhood stopped letting its users buy those stocks. Well, those users possibly could have pushed that stock higher, made more money for the user base, but they stopped allowing them to buy that stock. The stock crashed. And some people feel like it may have been a conspiracy theory that they were working in conjunction with Citadel, or at least that they were pressured by the company so that the stock could come back down to a reasonable level, since some of the hedge funds and different things like that were getting crushed from shorting the stock. And when the stock went sky high, they were losing a ton of money. I don't know the truth. I'll leave that for you in the comments to let me know if you think it was a scandal or not. But here's the issue with that. If it comes out, because there's a new civil lawsuit going on, if it comes out that they were in cahoots with that, then there's going to be another issue with A, trust, and then B, the fact that the way that Robinhood allows its platform to be free is that they take payments for order flow. And what that simply means, let me give you an example. The market makers say, hey, we'll pay you if you route orders to us and route orders to our system. And the way I like to explain this, or the example I want to give you, is I would look at Robinhood on my phone and I would use like another trading platform. And I would look at the quote for one stock on Robinhood and it would be way higher than if I bought it on a different platform. And there's two reasons why. Number one, Robinhood doesn't have access, or at least at that time didn't have access to all the exchanges. So there may be 6, 7, 8 different exchanges. Maybe they only had access to 2. On top of that, they were getting paid to route their users' orders to those specific price points. And so if a market maker had a higher price point, they were getting paid to say, well, even though you could get it for, even if you can get a stock for $50 on another platform, on our platform, it's going to cost you $51.25. And so they would show a higher bid ask price, and you wouldn't necessarily get the best price because they routed it to that market maker, and then they could make money off what's called the spread. So if that market maker could quick enough buy it somewhere for 50, turn around and give it to you for $51.25, they can make $1.25. Just imagine doing that 1,000,000 times a day, right? So you could see the conflict of interest if that were to happen, or if that is what was happening with payment for order flow and stopping people from being able to purchase certain stocks and different things like that. So there's this whole question if payment for order flow is even legitimate. So let's go back to the charts and talk about why this may be bad news for the company and why it might be headed towards zero. So if you look at the stock chart, the whole premise of Robinhood's business is commission free. Well, how do they stay commission free? They stay commission free by offering payment for order flow. So if they can't take payments for order flow, they may have to reinstate some type of commission. Well, who would stay with the company or the platform if they reinstate some type of commission when you could go and trade on a different platform for commission free? Or if you're going to pay a commission, you'd rather have better tools. You'd rather have a platform that doesn't take payment for order flow. So that's one issue. The second issue is that Robinhood's user base typically grows pretty strong by users referring their friends and getting free stocks. So what would happen if we stopped referring people to Robinhood because they stopped giving us free stocks? You really wouldn't just refer them because you're a good person. You start to look at other platforms and really compare apples to apples and say, maybe you should come over here and use the platform. Now, again, we refer people to the platform because if you're a beginner user, it's not bad. It's also a way to raise trading capital for your account. If you can refer enough people and get them into the stock market, you can earn enough free stock to start learning and to start playing with it. But what happens if that all goes away? Well, if that all goes away, you're looking at a stock that technically could fall from 42 really down to zero, because the new question would be, what is Robinhood's value proposition at this point? You're doing business with a platform that is not consistently up on the days where you need to buy or when you need to sell to get out. You're looking at a platform that takes payment for order flow, which may not get you, the end customer, the best pricing. Or if that stops, then they have to start possibly charge a commission unless they find another way to make money, which goes against their model. And then the third thing is, if they're not taking payment for order flow, they raise commissions and they stop giving away free stock for referring new users, then really, what's the benefit of opening an account there? I think they end up bleeding out a slow death right down to zero. So I don't know. Those are my thoughts. Do you use Robinhood? What do you think about the payment for order flow? The fact that they give out free stock, the fact that the server has gone down sometimes in the past. What do you think about that? Do you like the platform? More importantly, would you continue using it if they stopped giving you free stocks and implemented a commission structure? I want to hear from you in the comments. Let me know. Hit the thumbs up if you like this video. Hit the subscribe button and stay tuned for more videos like this. And I'll see you in the comments. I want to hear what you got to say.